Hello, good afternoon, everybody. See my screen, also hear my voice clearly. So before I begin, I want to mention that if you are trading gold, silver, other metals, you can now trade swap free from the latest FreshForex offer. So the only thing you need to do is to have an account with FreshForex, then just continue trading. They'll not charge you for swap. And what I mean by swap is the amount that you are charged for holding a trade overnight. So normally you'll find it at the bottom. It's all like if you check your terminal, you'll be able to find it. There's the part for commission, there's the part for swap, and then there's the part for profit. If you are checking the current trades, you'll be able to see it. So it is that which is not going to be charged. With this offer, there is no swap. You can hold trades overnight at no expense at all. So today's webinar is going to be a very good one. I've already looked at this for some times back. I can remember actually talked about MACD, but then I didn't explain it much. This is how MACD looks. A real chart. This is how it looks. And to add it, first of all, I want to look at exact way to add it. To add it, normally it's not there, but then to add it, just a second. To add it, you can use two ways. There's the insert option from the top here. Then we have indicators, also have oscillators. Then you move straight to MACD. Click it, then this window pops up on your screen. This is how it looks. We have fast EMA 12, slow EMA 26, and then we have MACD SMA, which is 9. So the average is calculated based on the close price of each candle. Click OK. On our screen. So basically this is how MACD looks. If you are looking at MACD, this is how it should look on the screen. But I don't like it like this. I will change this appearance. The lines, there are some vertical lines which you cannot see now. Change this and make them bold. Signal line also I'll make it bold, so we have something like this. This is how MACD also looks. It's the same thing that I was looking at previously, the same one which I've just changed the appearance, and then now it looks like this. So the first thing, I want to first of all find out exactly how they define MACD online. Before we proceed, this is what we have. So what is moving average, convergence, divergence? So this is like an abbreviation of this word here, and this is how it's defined. It's a trend following momentum indicator that shows the relationship between moving averages of a security's price. The MACD is calculated by dividing 26 period exponential moving average, the 12 period moving average. The result of that calculation is the MACD line, a 9-day EMA of the MACD called the signal line is then plotted top of the MACD line, which can function as a trigger to buy or sell signal. Traders may buy the security when the MACD crosses above its signal line, sell or short the security when the MACD crosses below the signal line. The moving average, divergence indicator can be interpreted in several ways, but the more common methods are crossovers and divergence. So basically what I'm going to look at is crossovers. I'm not going to dwell on this one so much because I already looked at this some few days ago. This should be some 2 weeks ago. I already looked at this one. I'm going to measure mostly on crossovers. Crossovers is when two moving averages cross each other. When you have two moving averages and then one climbs above the other one, you have a slow moving average and a fast moving average, and then both of them cross over each other. One of them becomes above and the other one gets to the lower side. That's what's called a crossover. It's something like this. Assuming you have this, then you also have this, something like this. You give this a different appearance, like this. So this movement here, the fact that they are now switching places, one was above, the other one's below, but then the one which was below has now changed direction, is now above. That is what is called a crossover. That is what is known as a crossover. So what I'm going to focus on mostly is how to use MACD to determine the correct crossover so that you can pick a sell or you pick a buy. But before we do this, I want to mention something clearly with MACD. Notice MACD, there's some invisible line in between here. We have some invisible line, it's at level 00, this one. Then we also have a red line, which is this is called the signal line. Then we also have this green bars. These are the columns of MACD. So how this normally works, ordinary, when somebody is looking at MACD, they will have an invisible line here, which we can make that line visible, add, and we now add some line to it. Has now been added. We have the columns of MACD that are above 00, and on the other side the columns of MACD are below 00. The same MACD, if I was to draw, instead of drawing columns, if I replace the columns with a moving average, we'll have something like this. We'll have something like this. This is the same MACD with the same settings. This is how it's going to look like. If you were to draw the same moving average, if you were to draw the same MACD form of moving averages, we'll have something like this. So how I've come about this one is that I've just made this just a custom indicator. It's not the same as this. I pick values from the main one, then I use those values to draw this one. It's the same thing. You can see here where the columns of MACD were actually swap places the signal here. It's the same place we had this one. And if you move forward in the future, we have this where there's a crossover. It's the same place where we have a crossover, the lower one. This one, sorry. You have this, and then you also have this one. Then if I was to add a line, this one, the lower one, you'll be able to see it's just this exact same thing. That's the line. So how do someone use this one? How do you make use of MACD with this crossover? Does it mean that you keep, anytime there's a crossover, like anytime the signal line goes above the main line, you pick a sell? How do you use this one to trade? How do you use MACD to trade? So the first thing you have to understand, as you've read just earlier today, MACD is a trend following indicator, which means it shows you exactly where the trend is going. If the trend is continuing to the upper side, MACD will show you a sell signal. And if the trend is going to the upper side, MACD will show you buy signals. So how do you determine the correct crossover? How do you find that this is now a good crossover so that you can buy it? The first thing is this. Keep mentioning this in each and every webinar, that your own sense of judgment cannot be outdone by an indicator. The way you look at your screen with your own eyes is much more important than what the indicator is saying. But then whatever you see should be supported by the indicator, because the indicator is not biased by whatever you're thinking. Somebody may see a sell just because the previous trade was a loss, so they are trying to complete the lost trade. But the indicator remains true. What it does basically is it shows you what is happening on the screen. Whatever the price is doing is what the indicator shows you. It does not predict for you. It shows you what is happening and what has been happening perfectly. So if, based on what you know, you think the price is going to go up, but the indicator is showing you that people are actually selling, it's better to look and find out why is it that your own focus is saying something else. So the best way is, if you are trading, stick to the default settings. Stick to these default parameters. Remain with them the way they are. Remain with this fast moving average. Let it be 12. Let this be 26. Then let this be 9. That's the correct way. Do not alter any of this. And you may work with this and you may want to change this, and this is okay. You can just change it and see what happens to the paper. But the change is always very, very small. So let these parameters remain the same way. Let them remain the same. And if you find that this has changed, you need to reset them, that you go back to the default ones. And the colors, this you can play with. The colors you can work with this one, and even levels you can add more levels, although there's an initial one which is 0, which works best on MACD. So as I've mentioned, you leave this settings to be the same. Apply to the close 12 to 26 and then 9. Also this one, this is the same indicator as the one above, just that instead of drawing a histogram, we've now placed a line instead. So I want to mix these two. First of all, just a second, I want to drag this and place it inside this one. Just look at how perfect it meets the other one. Second. But how perfect this is, how it fits inside. So if we place the one which I just made inside the previous one, it still fits properly. If we separate it, it still produces the same results. So as I mentioned, to use this correctly, you have to use your own sense of judgment. Understand perfectly where the price is going. If you've established from your own understanding that the price is continuing to the upper side, I mean to a particular direction, confirm that with the indicator. Do not trade the indicator alone. Like for instance, just a second, I'm going to separate these two the way I did before. Just a second. Sorry. We have this. The first thing you have to understand from your own perspective where the price is going. Just understand, use your own method to understand exactly what is happening. If you expect price to proceed to the lower side, then you now use the MACD in relation to what you think. We have this. This is what I'll do personally. Delete this. I'll delete that and also delete this one. The first thing, I now have a clean space. I draw my levels first of all. I have a line here. I also pick another line from the top. So it's not all the time that you'll have a shape like this forming on the screen so that you use MACD. No. Sometimes it may be something else. Sometimes it may even be just a pin bar. So if you have a pin bar pointing to a particular direction, you need to use the indicator to confirm that direction. So the indicator does not tell you exactly what to do. It is your own sense of judgment that tells you this is a sell, this is a buy, but then you use the indicator to confirm that direction. So if both the indicator and you are saying the same thing, you can go ahead and pick that trade. So we have this, also have this one. Then we have a level at this point as just a support. Continued up, it came back as a support, then somehow the price managed to cross below this level, which is at this point here. Anytime you have a level, then the price breaks below that level. If it is true that that level is significant, you'll notice that the MACD is also crossing below a level, below the 00 level. You'll realize that these columns of MACD are actually beginning to move from above 00 to below 00. So we want to confirm that first. Have this. Anytime this happens, that you had a support, a very good support, and the price breaks below that support. If you check any time frame, you should look for levels where, places where the MACD is doing the same thing. The columns of MACD are beginning to appear below 00. So once we had this support, then when price was breaking below it, you switch straight to a lesser time frame. Then you find out the place where that move began, the break below 00. Here, look at what happens. Actually, it started earlier here, which meant that we saw this as a support very well, but then the indicator started showing us a sell around this point here. So when we saw the sell now happening on the daily, that the price is now closing below a level, we now are supposed to look for a sell, because already the columns of MACD have confirmed that sell already. what you avoid is this, that we are below this level, then the MACD showing you a buy, yeah, then blindly you pick this buy. This is one thing you need to avoid. So after you've established with price action that the price is supposed to head this direction, you're supposed to sell and only sell, then you use your indicator and find that the price is showing you a buy. Don't pick that buy. Do not buy what is against what the price action is saying, because the indicator only shows you what has been happening. It cannot predict for you. It does not predict anything for you. It only shows you what has been happening and what is currently happening. If the price is going up like this, what the indicator will do is to show you that the price is going to the upper side. And on very rare occasions will you find that when the price is going up, the indicator is showing you actually something else. That's what's called opposite case, a divergence or convergence. So we looked at that previously. We exactly explained when that is useful, when you can use divergence and convergence. But today we are measuring only on crossover. Just look at this. Look at this first of all before we measure on that only. Look at this. Add this as a resistance. Yeah. Then there's a move down. It came back as a resistance. At the same time, when look at the value of this, the first high which you saw was this, the next high is actually lower. Confirm the same high with this one. But while the price is continuing upwards, this is actually proceeding to the lower side, which means the price will likely change direction. So since we are only trading a crossover, you only trade when the price has crossed, like when the indicator has crossed. What I mean by that is this. When you have this, second. Sorry. What I mean by crossover is this one. Already known that daily is a sell. Should wait for things like this. Yeah. This is a crossover. This is a crossover for a sell. Then this is a crossover for a buy. The green line has gone below the red line. That means we are supposed to continue to the upper side. But then immediately after proceeding just a few pips, the opposite happens. So when this happens, if you already know this is a sell on the daily based on price action, then you see a sign for a sell from your indicator. That should be a sell for you. So we'll not sell anything. We'll watch exactly what's happening, how the price is proceeding to the upper side. We'll watch all this. Then when the price approaches that level where we're supposed to sell from, then we see a sell. Pick that sell. And that means you could have sold it here. So there's a bearish move. Then we see a buy. Yeah. But then instead of buying this one, we wait for a sell. The main reason being that daily based on price action is showing us a sell, and then this is opposite. It's not the same direction, so we won't buy this, but we'll wait and sell this one. It's crossover. So one thing, just one thing, when you have your levels like this, when you have this indicator on the screen, be sure to know where the 00 is. That the crossover which we are saying applies best when the crossover happens above 00. If you want to sell, wait for this crossover above 00. Wait for it to happen above 00. And also these ones are sell places. If it crosses, if the signal line goes above the main line above 00, both of them above 00, then that's when you look for a sell. So the same thing has happened here. Just look at this. We have a similar crossover. This is a sell. We'll mark this like this, which means we're supposed to look for a sell from this point here. The same thing, we know this is a sell place already. Then the price, there was this move downwards, it comes back and then it moves up. Then we have a crossover here. When that happens, you're supposed to look for a sell. So will basically just be waiting for price to do something like this. Anytime it crosses over, you pick a sell. Anytime you have the signal line above the main line and both the two lines are above 0, 0, you look for a sell instantly. We'll have this as a sell, and then we'll also have this as a sell, this point here. That means even as you're speaking, you're supposed to be holding on to a sell. Then the sell proceeds down, price comes back again, we find this as a sell. Yeah, there's another crossover, this point here. So guys, the most important thing here is not always how complicated your strategy is. That's not the most important thing. The most important thing is how much you are willing to risk in any given trade. Because as you can see, this indicator actually is giving us very good places to trade from. If you are just checking this and you look for crossovers that happens at the extreme ends, that is at, very far away from 0, 0. If price moves up very, very far away from 0, 0, then you witness this, that is a buy. If price moves completely below 0, 0, very far away, and then you witness this one, then that should be a buy. That should be a buy there. So just look at how good this was. If we were just trading this one alone, we actually could have picked this sell, could have picked that buy. We also could have picked this sell. All this because the indicator which you're using is actually crossing above each other. The main line which is marked by this is crossing above the other one, which is this. So that means we are heading to the upper side. Also have this one here. We have this. It's another crossover which is very significant. That should be a buy. Yeah. And also mark this. Then that means we're supposed to have bought it when this happened. So we move forward. We also have this. Basically, the most important thing is not actually it's not how much money you have in your account, but how much are you willing to risk in any given trade. Because the MACD itself, as we've seen, is actually giving us very good places to trade from. If you are just following this one strictly, you actually had these places as buy places. You could have bought here. This is a buy place. So we've now found the correct places for entry. We found that anytime that happens, that there's a crossover, you're supposed to look for a buy. So how do you take profits? After you enter here, after entering around this point here, how do you take your profits? Now this is relative. Somebody can say that every time I risk like 2% of my account, I expect like 4%. That applies. But the correct way, what I've seen is that when price is going up and it has gone above the 0, 0 somewhere here, if you had your stop loss there somewhere around this point, drag it up to neutral, then wait for price to continue upwards. Then the moment it now crosses over for a sell, exit that trade. So we'll enter properly, we'll enter just when this happens. But when it crosses again for the opposite direction, we exit the position which you took previously. Okay, like here, if you take a sell when this happens, if you pick a sell on this crossover, yeah, I'll monitor this crossover properly. If you pick a sell there, that should be here. When price is proceeding downwards, don't do anything. Just keep holding on to, and then have your stop loss here above the highest high. Hold on to this until the moment that price goes below this level, which is here. When that happens, you now take your stop loss to neutral, break even. Then if it continues down, just hold on until the moment that it shows you that you're actually buying. Then you exit the previous position. This is how I actually take my profits. So it may not work all the time. It may not work all the time that when you enter sell, it goes your way. Sometimes you may enter and then the price proceeds to the upper side instead. That's not a bad sign. It's not a very bad thing that when you enter, it does not go your way. So how to counter that one is ensure that whatever you are losing in a trade is very minimal. But anytime you earn good. So that if you earn, like if I'm risking $2 here and price goes my way and then I earn like 25 USD, that means that I still have around 12 and a half trades. To be able to lose the entire profit, I still have to trade 12 times, which is impossible to lose the whole money, the entire profit, if you are using the same thing. So the first thing first, understand what is happening based on price action. Your own understanding. Ensure that you have a pin bar, something like that, where you understand that the price is supposed to head this direction. Then you now use the indicator to confirm that direction. Do not use the indicator alone. The indicator alone cannot do anything. It cannot give you an edge. The indicator alone cannot help you. But then, just by following it, you'll be good. So we move forward. Have this. Just a sec. There is this one here. Just look at how this crossover was perfect. If you wanted price to cross over so that you buy it here, you actually took a buy around this point. You actually took a buy when there was this crossover here. You took a very good buy there. Then we have this one. And that means you could have bought it when this happened. After buying it, the price continues to consolidate and then it moves up, continues up, and even crosses above 00, which is here. So when this happens, that the prices, the columns of MACD are now appearing above 00, you drag your stop loss to break even. That is, if you had your stop loss below, drag it to in money. If you had your stop losses here, drag it above where you entered so that you save that profit. But then don't stop at that. Hold on to that trade until there's a crossover for a sell, and that happens here, somewhere around this point. So if you compare the profit you earn from this point here to this point, or from this point is much greater than if you are just fixing your take profit. So the idea of fixing profit is really good. It's really useful, but then I don't like it because sometimes you may fix like this, then the price goes that way for maybe 2 days while you stepped out at just like some hours. Look at this here. Have this crossover, very good sell. Have this. So you can ask any question. This indicator, this is a custom indicator, is just the same indicator as the previous one. Then I don't like the idea of using histograms. I like lines, moving averages instead of lines. So we could have sold this here, and then we also could have sold based on that one. So the reason I'm picking a sell here is because there's this crossover. But then I'll hold on to this sell until there's a crossover first of all. When this happens, I drag my stop loss. If I sold here, there, and then I had my stop loss here, I'll not have a fixed take profit first of all. But then I'll monitor what's happening and what the indicator is doing. So when the price proceeds down, I'll go with price. And then that moment when this happens, that the columns or the moving averages have begun moving below 00, I drag my stop loss to break even. So that whatever happens, if it comes back up, I'm good. But if it continues down, I'll proceed down with it until somewhere here. So the entire amount, which is from this point to this point, is your money. This looks small, but it's really. If you successfully pick a sell here, then you are able to hold on to this level here, get a very good money. So sometimes this may happen. There may be some consolidation. You are likely to see a sell, but that sell does not mature. You see a buy, that buy does not mature. You see a sell, and that sell is the one that goes. So prepare for cases like this. If you are trading MACD alone, prepare for instances when you can enter trade, but then it does not go your way. It actually goes the opposite direction. And to avoid this one, to weed out this one, these areas where there's the consolidation, please, first of all, use your price action skill. First of all, understand what the price what the price is saying. First of all, if you expect a sell, focus only on the sell places. If you expect a buy, also focus only on buy places. That's simple, because you can see there are a lot of them. To press the period for this, just a second. I change the one of the period of the signal line. This is how it now looks, which means if you bought it there, you're supposed to hold on to that trade up to when this happens. So guys, that should be the end. This, we should meet again next week. So if you have any questions, if you're having any questions that you need to ask me, then please feel free to post them under the chat option on my screen. And before I leave, I want to say that if you are trading gold, if you like trading metals, then just know that FreshForex has already removed all the swap from 11th of September until now. We are still enjoying that offer. You are free to trade all metals without swap. So swap is actually the amount you are charged for holding a trade overnight. If you're that person who is a day trader and then you hold your trades overnight, then just know that the commission which is normally being charged has been dropped already. So you can now trade swap free. You can trade swap free from 11th of September. The thing is still valid. Just log into your account, open trades, look for very good positions, then trade freely without swap. So thank you very much. See you again next week at the same time.